Welcome to The Explainer. Today, we're going to be financial detectives. We're looking at a stock that, on the surface, looks like an absolute train wreck, but it just might be hiding a really interesting secret.
So it wasn't that long ago that our stock, ticker CHR, was trading for over $1.40 to be exact.
And today, it has completely collapsed by over 95% to just about 7 cents. I mean, that is an absolute bloodbath.
But what if I told you that somewhere, deep inside this wreckage, there are signals pointing to a massive potential reward? Okay, let's dive in and see what's going on here.
First things first, let's just survey the crime scene. The evidence for total collapse, well, it's pretty overwhelming. You really can't argue with it.
Okay, so the trend, it is brutally, undeniably strong to the downside. I mean, look at this. There's a tool called the ADX, the Average Directional Index. Now, anything over 25 on that scale tells you the trend is strong. And where are we? We're at 36. So yeah, every major indicator is screaming that this stock is in an absolute freefall.
And this brings us to our central mystery. With all this negative evidence, I mean all of it, why does a key metric suggest the potential reward is over 25 times the potential risk? That's a huge anomaly, and it's definitely worth investigating. Let's look for some more clues.
Now, let's look at the crowd, because an unusual number of people are suddenly very interested in this stock. The trading activity lately is more than 24 times the average. That is a massive spike in attention. But is this a crowd of people just panic selling? Or is it a new crowd of opportunistic buyers stepping in? The signals are really fighting each other on this one.
So here's the crucial point, right? When you see this kind of massive volume during a final price crash, it often signals something called capitulation. You know, it's that moment where the very last sellers just give up. They throw in the towel. And that can happen right before a potential reversal. And get this, the money flow index, which basically just tracks money going in and out, is super high. So even as the price is tanking, a whole lot of cash is actually flowing into the stock. Weird, right?
To figure out what might happen next, we need to bring in some expert witnesses, the technical indicators themselves. So, what are they telling us?
And right now, a lot of these indicators are screaming one single word: oversold. And all that means is that the selling has just been so extreme, so relentless, that it might be completely exhausted. You know, a rubber band can only stretch so far before it snaps back.
Now, what's really interesting here is the sheer agreement we're seeing across all these different types of indicators. Take the RSI, the Relative Strength Index. It measures how fast prices are moving. Anything below 30 is considered oversold, and we're at 22. Then you've got the Williams %R. It's at an incredible -96, way below the oversold line. They're all pointing to the exact same conclusion. The selling pressure is at a potential breaking point. And we're even seeing the very first hints of a shift. It's kind of like a car that's been speeding downhill is finally taking its foot off the gas. That downward momentum, it's starting to run out of steam. And for any detective on the case, that is a key clue. Okay, so we've examined the evidence. The stock is a wreck, no doubt. But the volume is surging and the indicators are all screaming oversold. The analysis really points to 3 possible scenarios for what could happen next.
So these are the 3 most likely paths forward: the final collapse, a sort of ceasefire between buyers and sellers, or a dramatic counterattack by the buyers. And each of these has a different probability based on all the data we're looking at. The analysis suggests that stabilization is the most likely outcome, kind of like a 10 standoff. But look at that. There's still a 1 in 5 chance of a dramatic reversal, that short squeeze. And that's exactly where that huge risk-reward ratio we talked about comes into play.
All right, so this isn't about predicting the future with a crystal ball. It's about knowing exactly what to watch for. This entire story now boils down to 2 critical price levels.
This right here, this is the key support level. It's the absolute line in the sand. It's the 52-week low. If the price breaks below this with any real force, that capitulation scenario becomes much more likely. That would be the bears winning the fight, hands down. And this is the wall of resistance. It's the first major hurdle that the buyers have to clear. A strong, decisive break above this level, that could be the starting pistol for that dramatic short squeeze scenario.
And this right here, this is the key takeaway from our whole investigation.
It's so simple. These two numbers, they define the entire battlefield. You don't have to guess. You don't need a crystal ball. All you have to do is watch how the price acts around these levels. That's what's going to tell you which of our scenarios is actually playing out in real time.
So why does all this matter? Well, because it shows how analysts read these conflicting clues in the market. It's not about being right or wrong all the time. It's about understanding risk, reward, and the powerful story a stock chart is telling. Thanks for tuning in.